Hey everyone, my name's Andy. My channel's Finding Value. If you like making money or interested in financial education, subscribe to the channel. I talk a lot about undervalued investments and a lot of information about investing, about kind of even sometimes engineering stuff, but not too much. It's more of an investing channel. If you like this content, please give me a thumbs up and leave comments below if you guys have any comments on anything. I'm going to talk about PGMs, platinum group metals, and iron ore in this presentation. So let's jump in here, see what I've got for the presentation. It's a short PGM introduction, and then we go into iron ore. Now, palladium and rhodium. Let's look at the demand for each of these metals for China and the global market balances. These markets also affect platinum, as platinum is a substitute metal, and strength in these metals will also be strength for platinum eventually. And I'm a big platinum bull. The ratio for platinum is cheap against all the other metals, which means that platinum, I think, is a good investment. So this is China palladium demand, just rocketing higher here. They are increasing the loadings in their vehicles. So it says gain in demand for higher loadings and then loss in demand from lower vehicle production. So they actually had lower vehicle production here, but the gain from loadings is quite high. Same with rhodium, higher loadings for cleaner emissions. This is the palladium market balance. You can see a large deficit over here on the right-hand side. 2020 is this guy right here, and we've got a large projected deficit of palladium. Remember, platinum is a substitute to palladium, so if palladium starts rocketing higher, it's going to drag platinum with it eventually. Here's the rhodium market balance. Very large market balance is going down. Prices have gone vertical for rhodium. It's off the chart right now. This only goes to 9,000. It's now I think around $27,000 or $28,000 an ounce. So very good opportunity here for platinum, I think. And for platinum projections, the platinum is going to be used in three-way catalysts, which will boost platinum prices. Siboney Stillwater expects platinum to reach a value of $2,000 per ounce in 2025. Next, I'm going to go to iron ore. Iron ore, just to show you, was projected huge deficit in 2020, and then the forecast for 2021 is to be a little bit of a surplus for iron ore. Now, China is a huge iron ore consumer, so this is their production over time. Decline, and their growth rate's going up to about 0 here. So they're importing a lot of their iron ore. This is a global iron ore production cost. You can see China's a high-cost producer. They are not producing as much as they used to, so they're getting it from Australia and Brazil and these other countries down here. This is the global iron ore imports. China is a key to it, and you can see all these imports drastically increasing over time. And they're continuing to increase at great amounts. These are the Chinese iron imports here. You can see these imports, if you were to look, 2020s in this magenta color, and it is coming on up. So we've got a higher import from China here recently in 2020s. Global iron ore demand, this is global. You can see that it's going to the upside here, 2020 with COVID, but it was on a trajectory of going up quite large over time. So it's going to be strong demand in the future for iron ore. Iron ore, my favorite iron ore play. If you guys are interested in looking at companies, my favorite is VALE. It has large reserves where the reserves are at. They pay a large dividend. And I think it's a good company for iron. They also have a good track record during commodity booms. They've returned exceptionally well in the past. They also have nickel, a high nickel, one of the largest nickel producers in the world. I think it is the largest nickel producer in the world, which nickel is also a great material to be invested in. So iron ore, nickel, Vale is a huge producer of both of those. I think it's going to be a great pick going forward. So do your own due diligence, see if you guys like it for your own portfolio, but I like it for mine. Remember, this is financial education, not advice. You're going to have to do your own work for your own investments on what's right and what's wrong for you. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.